everybody. Welcome to Trader Merlin Show. It is your Thursday edition. I'm going to say an interesting one because the numbers at the end of the day for our equity markets didn't look that great. They weren't that special, but of course we had a major name reporting earnings after hours, and all of a sudden that thing has just been ripping this market to the south side. So we saw a nice pop right as the market closed. Surprisingly, it happened so quickly. So that's what I'll focus on today. Of course, this is going to be a Q&A type of show. So if you guys have any questions, feel free to send those on in. I'm happy to join or incorporate your questions into the show as much as I humanly possibly can. Hello, Frankie Shop, Sam, Nicholas. All right, I think I got one of Nicholas and I think Frankie Shop's question going to be answered today. Let's see. Nice. You made it live, Nicholas. Good to have you with us. And Dave, where are you going? You said you were going away for 3 more weeks. Are you like doing a tour of duty or something? What's going on out there? Jorge, I'll even start with a listener question right off the bat. Jorge says, do you identify trades but wait for the trend confirmation? And a lot of what I do, I'm just looking for a setup, whether that is a trend continuation, whether it's a reversal formation into a demand or supply zone. It's waiting for that to happen. And once I identify those things, whether it's beforehand by identifying a supply zone or demand zone and acting on it when it comes into those zones, or reactionary, meaning confirmation type, where it's forming like a candlestick pattern that might be giving more catalyst for that demand zone. Like we talked about hammers the other day on the program. If I have a nice solid demand zone and I see price come into it, great, I'm happy to take the trade. If at the end of that day or maybe in the next day it formed a hammer formation, well, I have more confidence maybe to add more to that trade and let it ride for even more. So a lot of what I do is both anticipatory, which is coming into areas of supply or demand, but also reactionary depending on what the formations are. And yes, trend is probably one of the more important pieces. All right. You're hiding away, Dave. That's what it is. All right. Well, guys, Q&A is the topic du jour for today. And of course, I would be not doing my job if I did not show you this chart here. This is the big news of the day. Now, we did have earnings, and I'll run through a whole bunch of different earnings announcements, but Netflix is the one that really mattered because this is the one that I guess most people are focusing on. And I actually ran a poll today. I don't know if anybody saw that one I posted on Twitter. I'm gonna actually bring it up here just to see what the results were because I haven't looked at it since people. Where'd the poll go? One sec. Let me see if I can find this poll. So I had the poll earlier this afternoon. There we go. It's perfect. I'll bring one over here. You guys can see. There's the Twitter poll. And I said first popcorn trade of the Q2 earnings season is Tesla. Where do you think price will move after the earnings announcement? 16% said up more than 10%. 32% said, I can't even read my own writing. 16% said up less than 10%. 32% said up more than 10%. 9% said down less than 10%. And 41.9% said down 10% or more. Well, let's look at what happened out there with their earnings. Here is the earnings expectation. And you can see that obviously this is why their stock has been just ripping to the upside and flying. Is because back in 2016, they weren't really making any money, just a little bit. Now all of a sudden, their previous Q1 number was $1.57. They were expecting it to come out at $1.84, which I guess would make sense given the current situation that we're in. Most people staying at home, or people potentially signing up for Netflix, including myself. And here's what happened today. Oh yes, let's go forward one, and I'll show you the actual number. It came out at $1.59, so they still are increasing. They're making more money with regards to earnings. Now, I'm not looking at operation costs or any of the fundamentals. That's not what I'm an expert at, and I don't claim to be. I have other ones that are. Oh, did I really? Did I? Am I that stupid? Oh my God, I could have done it. I may have. Let's bring it up there. Oh my God, I'm an idiot. You guys are good. I have to comment on that one, how much of an idiot I am. Yeah. Thanks, Jeffrey. Then Prashant, yeah, I don't know. I was just in a rush. So, yes, we are talking about Netflix. I got that one straight. Tesla is next week. So, we'll worry about that when it comes. God, now I'm all embarrassed I made a mistake like that. Dab nabbit. Okay, so they still came out at $1.59, which for all intents and purposes is still really good. It's just it missed expectations by quite a bit. So did you guys see what happened? Well, let's show you the Netflix chart here. And this is why if you guys don't have direct access or access to extended hours trading, I encourage you to get it. Reason being, if I go here and do NFLX, and we see here's the Netflix chart. You look at it and you go, oh, it's trading at $527. Let's see what it did intraday because I heard that they missed earnings. You go to a 5-minute time frame, And you look at this chart here. This is pretty much just today. Now, when you look at this chart, you're thinking, well, it doesn't seem like it's that bad. Well, all the bad stuff happened after hours. So I want you guys to make a mental note of what this picture looks like, right? It gapped up a little bit, sold off. Right around 8 o'clock in the morning, it rallied, and then started to turn around midday. But all in all, looked rather positive. Watch how the scale changes when I add in the after-hours session. Boom, completely changed. We, at one point in this, this is a 5-minute candle right here, we hit a high price of $533 per share and a low price of $449. So you're talking an $80 swing on Netflix here in the after-hour session. So those that said down over 10% won because it was down more than that. It actually hit 14.76%, I believe, was the main. Let me get the exact number here, just so you guys can have it on your screen. Yeah, 14.76 is what it bottomed out at. Of course, it's down. It's a little bit better than that now. It's currently down only 10.29% in the after-hour session. So anyway, Netflix. The reason why this is so critical, guys, is because this is one of the bellwethers of the industry, right? This is one of the strong ones that's been pulling that NASDAQ up. For those FANG ETF holders, you're going to get a big punch in the mouth tomorrow on this thing. And we talked about this being the risk factor. If we look at the NASDAQ 100 as a whole, and you have Netflix, Amazon, Google, we'll call it Microsoft, and Facebook are the main drivers of that. Well, all of a sudden, you're going to get a 10% plus hit potentially tomorrow morning in one of the four. What do you think that's going to be doing to things like Facebook? Well, we can look at that in the after hours as well. Here's FB, right? It also feeling some pain from that. Here's MSFT, Microsoft, feeling a little bit of a down move. Nothing major there with Microsoft. How about Google? Here's Google in the after hours session. Nope. Sorry, Alphabet. Google really doing nothing in the after hours session. Really almost no volume. That's kind of strange. AMZN. Also, some downside moves. So that's your major play for what's been happening in the earnings space. Not like there weren't any other major companies. I mean, if we look at this here, I'll show you the list of earnings for today, and it actually, honestly, was pretty good. If you look at the earnings numbers, you had Bank of America beat, not by a lot, but they certainly beat. You had Morgan Stanley with blowout earnings. They almost doubled expectations. They're expecting a $1.19, came out at 204. That's phenomenal. Charles Schwab tanked a little bit. It was down, missed by 1 penny, but almost everybody else was beating expectations with regards to earnings. Of course, Domino's Pizza down there at the bottom, probably having a fantastic one on more home deliveries out there. So that is your main earnings season. Of course, we have a couple announcements tomorrow, but a lot of the big boys are really hitting next week. On the economic front, we talked about this as well. I didn't see the retail sales numbers plummeting all the way back down to 5%, especially since most of us are back out consuming again. Kind of felt like we'd see that number get beat, and we did today. Retail sales numbers came out at 7.5%, as you can see. I'll even paint those in green for you. You had the Philly Fed Manufacturing Index numbers beat expectations, retail sales numbers, as well as core retail sales, all looking pretty good. The main thing that gave the market the jitters, and this is why I hate the financial markets, because as soon as, if the markets were to continue to rally today, CNBC, Fox, and Bloomberg is going to be, wow, markets rallied because of a good retail sales number. Instead, the market sold off. So what is CNBC and Fox going to say? Oh, market sold off because of unemployment claims. Okay, great. Here's your unemployment claims. It really wasn't that big of a deal. Right? It's still a decline month over month if you look at it. I'll highlight these ones in red for you, which are the drawdowns for the markets today. You had business inventories declining. The housing market actually it should be not red, it should actually be green because it's a positive number. It was a good one. But the unemployment claims really, 1.3 million unemployment claims when they're expecting 1.25 million. So yeah, it was higher than expected, but still a decrease over the previous week's reading. So all in all, looking fairly decent. But he just says bloodbath future open tomorrow. I don't think it'll be a bloodbath. I don't think so. Certainly will be down a little bit. I mean, when you saw Netflix come out with earnings, the S&P at that one moment in time was down about 0.4% on the ES futures. And within that 5-minute window, it was down 0.8. So it doubled the losses in snap of the fingers. But, it's just Netflix. I think it got a little bit ahead of itself. We'll see what happens next week and some of these other names start to drop. But all in all, a bad day if you're holding Netflix or any Netflix-related issues. Okay, let me, by the way, again, guys, this is going to be a total listener-based show today, so feel free to interject here and ask me questions if you got them. This one came in from I think I might have mislabeled this. This one was, it says from Hisham. All right, well, look at this one. I think I have this written for two different ones. Hisham says, can you give me your opinion of Mondelez? I love it. How can you not like Mondelez? Who doesn't like Oreos or what else they make? Ritz crackers or Triscuits. I'm a snack guy. I do like my snacks. So I'm a fan. Now, of course, that's besides the point on my preference of cookies and snack interest. Gone are my munchie days, if that's what you guys are thinking. I will bring up MDLZ here so you guys can see what that looks like. Technically, I'm not that big of a fan of it. And you'll notice there's something that should be very obvious. And I'm not that big of a fan, meaning I don't feel like I see any distinct up or down trend. What I do see, and I think you guys could all see this on the chart here, is a very distinct sideways price action. And that's great. That actually is a phenomenal thing to be trading. So let me just put a yellow box on here since TJ can't do it for me. You notice that Mondelez, or however you want to pronounce it, has really been stuck in this range. And I'll put some floor and ceiling numbers on here so you get an idea of what that range might be. So for those of you looking to do spread trades, as we talked about with Tim Blotzer yesterday, this might be it. To me, it looks like you're looking at about a $50 to $54 range here on Mondelez for the past over a month. It's just been stuck in this range, and I don't really see any reason why it should break out. If it hasn't done it yet, I don't see what reason would be a catalyst for it now. Of course, I believe, this is just my naive assumption, I believe more people are going to grocery stores and buying food to eat at home. I certainly have been doing way more consumption of food at home, which of course would benefit a company like Mondelez because they're doing basically snacks. And it's not just snacks domestically, guys. They're Toblerone, they're Ute, they're all over the world with regards to their brand. So they have a strong foothold on it. But to go to Hisham's question, I don't really like it as a long-term hold now. Why? Look at it. I mean, you could even go out further. If we wanted to stretch this out, you could say it's been stuck in this range between, call it 54.60 and these lows down here, and that puts us all the way back in April. I mean, it really just channeling sideways. So until I either get a breakout and want to add this to my portfolio, I'm probably going to wait. If it does get down near 50, that might be a good opportunity for a shorter-term swing back up to, let's say, 54. But right now, it's... I don't know. It's not that attractive to me from a long-term perspective. Because this is snacks and food and that sort of thing, yeah, it should hold up well. I would probably go with the big brother here, which is going to be Constellation Brands. That's STZ. I like it because some of my favorite light beers, Corona and Modelo, are owned by Constellation Brands. This at least has a more defined uptrend on it. And of course, if we were to add in some of the indicators we talked about on the program, I'll add on a moving average here. My guess is this thing's going to be really hugging that 20-period moving average. So let me take off the 200, put on the 20-period moving average. And you can see that every time it comes down to the 50, it bounced off pretty aggressively, going all the way back into May. Right now, you're looking at around this 20-period moving average. And the only reason it's chalked back and forth like this is because of these big gap downs. You see Constellation Brands does have a good amount of volatility to it, especially over the last few weeks. So I would be more interested if I'm looking at buying something and buying Constellation Brands. I know they're not snacks. They're not like General Mills, which would be GIS, which would probably be better than Mondelez. I can't even pronounce that damn thing. What was the other one we look at? MDLZ. Just so I can, see, when you have moving averages going sideways like this, that tells you that there's really not much here, unless you're just trading a range-bound market, which would be good for somebody like, anybody who's an options trader looking at spreads, would be a good opportunity here. So there you go, Hisham, that's what I'm looking at there with regards to Mondelez. What else do I got here? Question, can you describe what your written trading plan looks like? Ooh. Well, it's 42 pages. That's what it looks like. 42 pages. People have been asking me to do a show on trading plan, which I might do at some point. No, I will not send you mine. Everybody always asks that as well, and it's that's just you guys got to do something on your own. But a trading plan, look, it looks like this. The very beginning of it, you establish why you're trading, right? And I don't want you to put as why you're trading. I want to make money. To me, it's irrelevant. There should be a greater good here. Are you trading so that you can have money, so you can give your family a better life, so you can travel around the world, so you can donate to your church, whatever the case may be, there should be a goal there that you're hoping to achieve. Now, so I talk a little bit about what mine is, and then I go through my trading rules. Like, there's things that I can and cannot do. So I talk about my trading strategies. And the reason it's so lengthy is it's split it into two portions. There's really the shorter term day trading side of it, and then there's more of the longer term aspect. So for me, that trading plan, way it's split, the first part talks about day trading. So I'm looking at short term stuff. So I have my amount of money I'm willing to risk per trade, per day, per week, right? I have those limits, and I tell what I can do for each of those situations. Like, if I manage to lose 3 days in a row, well, what happens? I have to punish myself or at least regroup and try to get back on track. So those are all things that are written down. I also point out strategies. So for those of you who are Online Trading Academy graduates and look at core strategy, a lot of those core strategy principles are in my trading plan, right? I have graphics. I take a lot of pictures of different setups that I like. So obviously the criteria for supply and demand zones, which for those of you who know it, it's all mapped out in there. I also have a lot of pages that are dealing with chart patterns. I'm a big fan of chart patterns, so I would draw the patterns and then explain why, what they mean to me, how I trade those. Similar to what I did the other day when I showed you guys how I trade a hammer or shooting star formation, right? That graphic is in the book, or in my book. It's thick enough to be a book, but in the trading plan where it just says, here's how I trade it, here's what it means to me, and here's where I would place my entry, my stop, my price target. So those are the main things that are in there. Also, I do talk about review schedules. So I tell myself, hey, once a year, I got to go back through and review my trading plan, do some analysis, and figure out where I'm performing better or where I'm performing worse. I think a lot of people will measure their success by the end of year results. I think that's kind of a fool's errand. I think you need to go back through and look and see where might you be able to refine your trading and make it better so that the next year you don't have those drawdowns. So that's the basics of what it looks like. Is there a standard reward risk ratio that you would use for a bear call or bear bull put? Not for me. I'm not a spread trader. So I'm a pure directional guy. So when I see something coming in demand, I'm probably buying puts. If I see something drifting down and I want to buy it lower, I'm probably going to sell some puts. If I don't like the multiple leg strategies. It just it's not really my thing. So I can't give you any input on that one. Sorry. Pedroin. I almost threw a nice Italian accent on it. Pedroni, but it's not. It's not an Italian accent. Companies going into bankruptcy. Who foots the bill for the loans or debt when that company had? Well, taxpayers. I mean, ultimately, if there's any sorts of, we'll probably end up bailing them out somehow. Not sure of the whole bankruptcy process, but we're going to see a lot of them. I actually saw a great diagram the other day which showed more just how quickly companies are ramping up bankruptcy. Some big names out there. Lucky Brand Jeans. Those of you guys like the Lucky Brand Jeans. They just filed for bankruptcy too. You got a lot of them, and there will be more and more, but I don't know who foots the bill for it. I don't know. Okay, let me see what else I got. Merlin, bearish engulfing candle. Do you include wicks? Check out NQ 4-hour time frame. All right, let's check that one out for Jeff. Let's go back to my charts here, full screen. We'll just do the bring up add NQ and go 240 minute. Now let's see. Let me go back and read that one. Bearish engulfing. Do you include the wicks? Check out the NQ 240 minute. Is that a setup? I don't really see an engulfing. I'm assuming you're talking about these last two. So to me, that wouldn't be an engulfing pattern. And I'll show you why. If that's what you're referring to, let me just get these moving average lines out of here. If that's what you're referring to, then it's no. It's a no for me. And here's why. If you take the range of this last candle, right? Last candle, and you notice that the candle before it, this green one here, which almost looks like a hammer formation, that bottoming tail is outside the range. So no. And most people will actually be very technical here where they'll say that all the tails and everything have to fit within the real body. So this red candle that you see here on your screen, they would say that all the topping tails and bottoming tails would have to fit within. And maybe I might be able to fudge it and make it look right. Let me see if I can artificially create. No, I can't do it. Sorry. Just the drawing tools just don't let me do it here. But normally, the pure technicians would say the tails and the real body have to fit within the real body of the engulfing candle. So nope, this one, nope. There you go. It's not engulfing in my book. I do have some patterns I'll show you. Guys, did you see the shooting star on the NQ, though? That one's beautiful for Monday. That was just a gorgeous one on this 4-hour time frame. Look at that thing. If you guys just the rule I established on the Monday session, there it is right there. Bam. Right below the low. Boom. Okay, what else do I got? 42 pages plus comments and double-sided plus strategy. Yes, I think that's his book. Yeah, it's not my book. It's not my book. I don't think I'll ever release that one. That one I'm keeping close to the vest. Let's tell Tilly we got Merlin. No, you're not getting my book. Do I still log your trades before and after a trade? No, I don't do that anymore. But you know, it's the old do as I say, not as I do. So especially for those of you that are in your first year or two and you're still struggling to find your way, you should log all your trades. That way you can go back and see what you did. It's hard for somebody like myself, especially back in the late 90s when I was doing 500 trades a day. I'm not logging those things. There's just not enough time in the day for me to do that. So the swing trading stuff, the investment accounts, yes, I always log that and try to go back and learn from them. At the end of the day, when I was making all those aggressive trades, you know, I'd go back and try to see what I was doing right or wrong, but it's hard when you do that many trades. But you learn so much from your review, your analysis of your trade journal and your trade log. In my years of teaching this, I would say the vast majority of people do not care. They don't want to look at their trades when they're done. They just say, is my P&L positive for the day? Great, I made money. And to me, you're missing the boat. How do you get better? How do you find out what you did right? Maybe there's a recurring theme which keeps happening over and over and over and over again. But if you don't look at your trading journal or your trade log, then you're ignoring it. And it's going to keep happening over and over again. So, you know, to me, they're critical, especially in your early years. Obviously, once you start to do this for 20 plus years, you start to know yourself and you know right away what you're doing right or wrong. And I don't necessarily need to journal my trades anymore. So there you go. No problem, Dave. I saw an ad today for OT on Facebook. I said, did I miss something from the FTC? No, there was a tentative settlement with the FTC. I don't know what that has to do with ads or anything, but yeah, I know that they're back doing their Facebook thing. No, we're allowed to operate as a business. It's just there's certain restrictions until this whole thing gets settled with the FTC, which is an absolute joke. But unfortunately, we have to wait for that thing to happen. Right now, the FTC is just dragging their feet as any government organization does, and that's really unfortunate because we want to get moving. All right, let me go through here. Tesla's engulfing. I did not see that one, Mike, but that's going to take me some time. I don't have my login for Click right now. That's why I haven't been using it. I forgot my login, and as you guys know, I have so many logins. It just kind of drives me nuts when I lose a login or they change a login and have to reset a password. So I don't have that one right now. I will look into it though. Let me go into more list of questions. I had a few here that popped up, so I want to keep going with these. That was for Hisham asking about Mondelez. Another one, this one came in today from Lawrence asking about a shooting star. Okay, why not? There was an interesting one. I did look at this chart, by the way. So if we go back to the daily and look at Dell, you finish the day here with a beautiful shooting star, right? I mean, that's a gorgeous shooting star. Unfortunately, I wish that the candle itself was red. For those that don't know what I'm talking about, I will put a little blue arrow right underneath this bad boy. There you go, tiny little blue arrow there. To me, that is a great shooting star, but I would prefer if the candle was red. Remember, if we talk about the qualifiers, the whole body is in the lower third of the candle, and in like the lower fifth of that candle. It's got a long topping tail. The key here for that Dell is, did it run into any area that may have been an issue for it? So I'm going to just zoom out here and see if I find anything. I could probably break apart this candle from back in May, and that would give me probably an area of supply. Not totally sure on that one, but I'm not going to go into that. So basically for Lawrence, how would you trade this? Well, I think we did on Monday where I talked about this. It's pretty simple, and this is just how I do it. You guys can do it totally different, but I just want simple rules that I don't break. And that would be, if it opened up above 58.55, I'm interested. If it crosses down below after it opened up above that line and then crosses down below it, then I'm interested in taking a short. That's a big gap to fill out there on Dell. Yep, I like that one. So yes, definitely a shooting star formation, and I like it. Okay, I'm trying to read your questions here. All right, let's go to, okay, so I apologize to the gentleman who I must have wrote your name down, because Hisham actually sent in a different question, but whoever said the Mondelez question, thank you, appreciate it. Hisham sent this one in, which is, thank you for your great show as always, and for the explanation of hammer, shooting star method, and trading. Can you share where would be a good stop location for this type of setup? Okay, let's apply what we talked about to the Dell chart that we just looked at here. So, a couple of things. There's an easy way to do it, which is generally you want to put your stop loss, above or below the bottoming tail, whichever. And since it's shooting star, you would say, okay, I'm going to put my stop loss above this price point right here, which is a long way away, but I don't know if that's too far, right? Right now, I would be looking to go short if it dropped below 58.55, but a stop loss somewhere above 61.63 seems like a long way. That's 45, brings me to 9, 10. I mean, we're looking at $3, $3 and change. Okay, I don't know if that's necessarily too big of a stop loss or not. Don't let that amount of stop loss scare you, because you could adjust for that with share size. The question becomes, what's your target? How much do you think you're going to get out of this trade? Well, let's do one thing here. I'm going to add in something called average true range. And you can see that just because of that candle, how much it spiked. You guys can see this bottom blue line here. Up until yesterday, it was $1.57 was its average true range, meaning that's how much it moves in a day. Well, today, it's at 204. I mean, that's a significant increase, and that's all because of the big gap up and the move that it had today. So even if we had a $3 stop loss, it's moving $2 a day. That stop loss would probably be adequate, right? But it doesn't need to be that much more than $2. So if you're using that $3 stop, that's probably fine, but you have to ask yourself, where's your target? Where do you think this thing's going to come back down to? Well, what's it been doing? This has been on a beautiful uptrend. Just to confirm it, we can use techniques in case you don't want to be, skilled and use your eyeballs. Moving averages are both sloping up here. It's running right along that 20. You could probably bump this out to, let's say, a 25, and it's going to hug right along the bottom here on this moving averages. Pretty much right about there. So all in all, this thing is trending up. So my target's probably going to be back down here, somewhere right around, let's call that 50, 51, 52? 52 and a half, somewhere would be my target for this one. And this poses a bit of a problem now, because the math isn't going to make sense. The math won't make sense for me to go and say, all right, I'm looking to go short when it gets down below 58.55, but my target is, I'm gonna change this to make my math easy for us, guys. I'm going to make it 52.55. Okay, so I've got a $6 profit target. I'm hoping you guys are all with me on this one. $6 profit target if it closes this gap. But I've got a $3 stop loss, so I'm looking at 2 to 1 already. I don't know if I'm a fan of that. I'm not a big fan of taking I don't like 2 to 1s. I know some people will take them all day long. I'm not a big fan of that one. You do have a little bit of an advantage because you're waiting for it to break down below 58.55, and that gives you a little bit of an advantage. So the question now becomes, well, if I want to do a 3 to 1, this number here has to be, let's see, the number was 58.55, so I got to risk $2, which would be 60.55. That means my stop loss would be right there. And let me get rid of the ATR at the bottom. If I'm losing you guys, let me know. I'm kind of just rambling, but there's techniques behind the rambling. I'm just trying to get to this better example here for Hisham. So I would be more inclined to start thinking about this 60.55 as a stop loss, simply because the ATR was $1.50 before today. If I have a $2 ATR stop loss, that's already it's already adapting to the ATR if I go $2. And now it will give me a 3 to 1. The question is there anything there that would make me feel like it would stop at that level? Well, how do I find out? Well, we break it apart to a smaller time frame. And actually, it's actually not too bad. You could look at this and make a couple different reference points. You'll notice that the one that actually appeals to me the most is right here. And you guys can see that it's had 3 aggressive red candles out of there. So maybe I could even bring it down to $60.23 since I want to incorporate this tail. Yeah, maybe I will say, all right, I'm going to go $60.50. Does that make sense, everybody? Y'all with me? So if I've got 60.50 stop loss on this one and I'm looking to go short when it crosses below 58.55, this would now work for me. I could now modify this and take a 3 to 1 trade on this and feel comfortable with it. if that makes sense. That's to me what the whole goal would be with this one. So that's kind of how I would place the stops. Generally, I'm going to try to, Hisham and others, put my stop loss above this topping tail, but in this case, there's no need for me to give it that much room. It doesn't normally move this far. It moved way, way more than normal, so I'm not going to put it up above that tail. Now, let me show you another chart here. Intuit had a nice setup today. Okay, so here's Intuit. Although it's a red candle, I like it because it just really feels like it's just basing along these lows. You guys can see that for the better part of 2 months, it's just been sitting right around 281.75. Now, you can do a similar thing here. You know, where do you start to place your target? So you're going to place your target up here at that 309 mark? Probably. That's a decent one. There's also some other targets in here where you could say origins of gap at 297.64. But for me to get long on this bad boy, it's going to have to break 288.41. From there, I can already start to map out your entry, stop loss, and price target, right? In this case, it looks like a $7 stop, so I better be trying to make a lot more than that, which if we use the 309 target, it would suffice. It would work. Okay. Hopefully that helped you, Hisham. I know not in a classroom environment. I didn't get a whiteboard yet, so I'm working on it, guys. I'm working on it. I'll get that whiteboard up there. Let me see. What else did I have? Let me go through some that have been in here for a few days. We'll go full screen, and I will show you this next one. Jake H says, I'd asked a few weeks ago if you could recommend somewhere to start for basic learning. I think that you could probably accomplish a lot of that here. The goal is you just got to ask me questions. You got to let me know what you want to cover, and I'm happy to cover stuff. I'm not going to step on the toes of Online Trading Academy and what they teach, so I won't be going into detail on that type of stuff. But basic market knowledge, there's a lot of good resources. One of the better ones, and I say that because I help build a lot of the content, is OT Academy. You go to otacademy.com. It's free. There's a ton of great content there that was built by myself and a lot of other OTA instructors. Some really good content there for free. So that's where I would point you to it. What else do I got for the viewers out at home? Maybe the viewers can help with this one. This one I don't know. This is from Otto in South Africa, and I believe Gayer, you're in South Africa too. He says, could you perhaps propose international brokers I could consider for trading Forex, US stocks, E-minis? Unfortunately, I'm not international anymore. When I lived in Europe, I was very familiar with all the brokerage firms over there, but that was a long time ago. I didn't have a receding hairline or gray hair back then, so as you can see, times have changed. So I don't know brokerage firms out there. What I would recommend, Otto, is maybe some people in this room I know are international markets might be able to give you some advice. If you have a specific asset class, I might be able to ask my peer group or international trader friends and see what I can find. But I don't really trade anything international anymore. I'm pretty much all domestic, so I can't help you there. All right, simple terminology is another good topic. This is one from Koja Trader, asked this one, I think yesterday. He says, bullish, bearish, and rug pull. What is a rug pull? Oh, it's the same thing as you'd have in your regular life. When you get the rug pulled out from underneath you, it's pretty much you're thinking things are going one way, and all of a sudden it just rips the opposite direction. You could say that I had the rug pull on me on my S&P trade, which was basically looking at it from an opinion perspective about this COVID thing and quarantine and market behavior. And I built a pretty sizable S&P position, which I am holding, and I will probably dump here soon. My rule was to dump it on Friday. We'll see how it reacts tomorrow. But yeah, that's basically, I had really a lot of evidence, at least from my analysis, that we'd see not a return down to the dead lows that we saw back in May, but at least another leg down. Maybe we get another 15-20% drop was what I was kind of banking on, and it just never happened, right? So that's basically a rug pull. The market did pretty much the exact opposite of what I thought it was going to do. Oh well, that's just the nature of the beast. At least in this, I had a predefined amount that I was willing to risk, and I knew what that number was going in. Didn't want to lose it, but if I did, oh well, I defined that when I went in. So that's what a rug pull is called. Okay, let me see. I've got, I think, Nicholas, yeah, you asked this one here. You sent it in multiple times, so now you're doing it in chat. So I'll pull it up here because you had this one. I think you sent this in to tradermerlin.com. He says, I'm in on USAU at 655, and it's hit my first target of 815. I have 200 shares, and typically, I think you meant typically, peel off at the first target. But lately I found that I don't let my winners run up. Do you have any thoughts on how to manage this trade as I am in profit and want to give it some room to breathe? Good question. Let me go to the chart of USAU. USAU, go Corp. All right. And he said, I'll put some lines on the screen here so you guys can see kind of where that position builds out to be. He mentioned that he was long, and I'll put the price on there, which is $6.55, and a target of $8.15. So I'm hoping that you took some off at $8.15. You should always take some off at your target because you get that subconscious pat on the back. It just makes you feel good knowing that you hit your target, and I mean, that was after a pretty significant spike. So I'm hoping that you pulled some off here. A couple different ways that people like to do this is you could be using a trailing stop, right? And the trailing stop is could be one of several numbers. You could use your average true range for a trailing stop. Which should be kind of automated. You could use a percent stop saying, hey, if it drops 3% or 5% or 2% from its current price, then just stop me out automatically. And just about all good platforms have that functionality in there. Now, the other thing you could do is, I'm going to put a cursor on the low of today. You can see it's 755. What a lot of traders will do, especially when something is in a strong trend, and I wouldn't say this isn't a strong trend, I just had a recent pop. But if something's in a strong trend, there is a belief system that, you know what, it's strong for a reason. It's going to continue making higher highs and higher lows. That's the definition of an uptrend. So if it stops making higher lows, then it could potentially reverse and go down. So a lot of traders will just move their stop loss to the low of the previous day. In this case, on this chart, you're looking at $7.55. Now that's only 2 cents away from current price, so your odds of getting stopped out are pretty good. But had you done it the day before, you'd move it up to there, then to there, then to there. And if it keeps on rallying, you'd stay in. That's why I always like to take half off the table, because I feel like I've got some money in my pocket. You can't take that away from me. And barring some crazy gap, I'm not going to lose the rest of it, especially if I trail this. And which way you trail it is kind of up to you. There's a lot of different ways to do it. Oops. No, we're not doing anything there. Let's see. Mark says, Merlin, is a rug pull kind of like what gold did today? I mean, look, when something goes the opposite direction, I wouldn't say this is a rug pull. I mean, it was just a quick sell-off. It's one day. You could make it a rug pull and say, oh, the rug was pulled off from underneath me if you were a bull. Sure. But to me, I look at the price chart. This is just a normal pullback on gold. You see a lot of red candles that look very similar to that one. So, no, to me, not that big of a deal. Jorge says, how do you take partial profits in Atlanta? You can just sell a portion of your position. I don't know the new rules. Honestly, my spot Forex hasn't been touched in months. I'm pretty much just futures, options, equities right now. But back when I did, it was basically just typing them out that I want to sell off and sell it. But there were some rule changes that happened last year, which I think tweaked that one out. I'll have to get some more info on that one for you, George. Okay. Christine says, DeGiro Flatex for EU brokers. Yeah, and again, for anybody who's looking at brokers, always do your research and check them out. And just because I'm part of something like Online Trading Academy, I have to always say this, is there will always be haters, right? I'm sure that the individual who I detest with all my heart and I wish bad things upon him, I'm pretty sure he's out there saying bad things on social media about Online Trading Academy just because. Right? It's competition. So always look through and take those comments with a grain of salt. You'll find a lot of people are shilling for other competing brokerage firms and saying bad things about that firm. So go through, look to see if people are actually trading. And I guess there's certain criteria that you want to look for with any broker. Speed of execution is pretty critical. If there's delays in execution, you got a problem. Customer support is a major one for me. Like, you want to make sure that they're responsive to you, that they understand your problems, and that they're going to listen to you when you. They're going to listen to you when you need them. Also, slippage, especially with the spot forex markets. When you have a spot forex market, there is a lot of slippage and really bad fills. And if you see in some user groups a lot of chatter about XYZ broker saying, hey, there's a lot of slippage or problems here, then that may be a problem. Just don't take one person's comment as being bad and deter you from it. There's bad comments about everybody out there. I got people who hate me, so it's fine. All right, let's go Tesla. You guys, we got a lot of people asking about Tesla, which I can't believe I made that mistake today. It just drives me nuts. TSLA. All right, so you've got this, basically what you would call a pennant formation. It's basically a triangle that's compressing price. It's still making higher lows, but it's also making lower highs. Think of it, again, like a spring that you're pressing in between your fingers, and ultimately that thing's going to come shooting out in a specific direction. Normally, when that fingers get released or that spring comes shooting out, it would be in the direction of the previous trend, in this case up. Hard to believe that you'd see Tesla have another monster rally out of here, but hey, anything is possible, especially when you look at the valuations and what people are buying right now. It was the most added security on Robinhood traders the other day. I don't know if you guys caught that. It's just, you gotta love Robinhood traders. I mean, they're just piling into stuff they really don't know too much about. Let me see if I can bring this one up for you and show you on Robin Track to see if that in fact is still the case, or if some of those guys sold out. Because the day that it spiked up, that's 3 days ago, it was number one. So let me go here and go to leaderboard. So Tesla. Look at that. This green line represents the number of Robinhood users that have been buying into it, and the number of accounts that have it. Not the number of shares, just the number of accounts. And you can see it's gone from 100,000, well, about 100, looks like about 125,000. Yeah, about 120,000 in January, and now all of a sudden you're in almost 500,000 accounts holding Tesla. That's a lot of shares. It's a lot of retail knowledge, and of course it has come crashing down in the past couple of days. I can zoom in here a little bit and you can see that. Yeah, so all these guys who bought this big rally are now left holding the bag on something. They probably bought it at $1,750, maybe even $1,800. Well, they were poor guys. Well, not even $1,800, didn't get there, but I was close. Close, $1,794. All right, what are the questions you had about Tesla? Tesla pullback slide, would you recommend selling? Look, I've been vocal on Tesla for a long time. I think the valuations are a little beyond valid. I think that they're way too elevated right now. I think it's definitely due for a retracement. However, these markets are not rational right now. So I would set a number for yourself if you are long on this one. I see some of you might be long on this. If you are long on it, I would simply sell once it broke down below a specific number that makes you comfortable. Tuesday they report, I think it's Tuesday, they report earnings. I'd be very careful with that. You know, you saw what happened with Netflix today. It could be a lot more extreme with Tesla. Tesla's had a way bigger rally in a shorter period of time. I mean, look, in 2 weeks, 3 weeks from the, I'll just give you a level here off the number of days. Let's go back to this where it really kind of arced up. It's an 88% rally. 88% rally in the value of Tesla in how many trading sessions? I'm not going to do the number of days. I'm going to do the number of trading sessions in 11 days. 11 trading sessions. That's a little over 2 weeks, just barely over 2 weeks. It's up 88%. Does that seem rational? Did they create a flying car? No, they didn't. So this is, you know, I personally think you're going to see this one come ripping back down at some point. So that's just my opinion. Joseph says, would I buy a Tesla car? No, I wouldn't. I'm not the type of person to spend that sort of money on a vehicle. You know, I'm not going to spend $100,000 on a car. I mean, for me to buy the vehicle that I drive, that was a stretch for me to pay. I paid about 40 grand for mine, and I was like, oh. But it's my type of vehicle. I'm not a fancy car, you know, BMW. I wouldn't call BMW fancy, but in this world as a trader, everyone thinks you got to be driving Ferraris and Lambos and stuff. I could care less. I wouldn't waste my money on that. Okay. Yeah, Tom, that's a good point. And I've heard this from multiple Tesla. To me, Tesla is like Apple. You have people who are such devout Apple users that they could care. You couldn't show them anything and get them to convert to a PC. There will always be fanboys of Apple. Tesla is no different. I have a couple of friends who are always hitting me up anytime I say something negative. They're calling me an idiot. You don't know what you're talking about. They're saying, oh, Tesla's the greatest car company ever. Yeah, Tom says it's the number 31 ranked of 31 brands in initial quality. Tells you they're not that great at cars, but I love the concept. I'd like, you know, they're powerful, they're cool, but it's not for me. I would actually prefer. You guys remember that the truck we were looking at. If they come out with a nice SUV or a pickup truck that is an electric one that doesn't look like a hideous, horrible art class failure like I think the Tesla truck is, then I would be interested. I think that'd be pretty cool. All right, let me keep going here. I want to make sure I get to some of these questions because I like this one from Nick. So we had Nicholas, and then I have a Nick question. I'm guessing they're different. So Nick, Nicholas, I hope I answered your question about the stops and scaling out and things like that. Here's one from Nick. Hey Merlin, curious as to what you think about going long on Boeing at around 154. And this was a couple days ago, so the numbers may be wrong now, but let's see, 154.50. I'm looking at the 4-hour chart. I see a little zone action between 154 and 142. I would like to wait until the cheaper zone to get in, but it's such a huge move out of this area. My fear of missing out is telling me that I should try to get in around 154. What are your thoughts? All right, I am not bullish on Boeing at all. I don't see the airlines rushing out there with new capital to buy new airplanes. Right now, we've got airplanes sitting on tarmac all across the world. I can't see Boeing all of a sudden having some renaissance and saying, hey, this new plane is going to just be the best thing ever. If I'm Southwest Securities, if I'm Delta, if I'm United, I'm going, hey, I got enough 737s. They're crawling out of my backside. I got so many of them. I'm okay for a while. I think Boeing's going to take a big hit. We saw it initially happen. It really hasn't had too much of a pain point here, but you talk about 154. Let's throw that line on the chart here and just read the number 154. Oops. I can put that data in here. I keep my charts on snap mode, so it makes it a little more challenging. I actually like that point. So if you're talking about it getting down to 154, that's great. And there's also one that I would say is a little bit lower. I think you actually mentioned this one too, right around the 145. I think those are both decent buy points if you have the opinion that Boeing is going to make it. I'm not make it. I'm not going to go bankrupt. Don't get me wrong. Let me go to a weekly time frame here. How much longer until they all of a sudden become in vogue again? Everyone's buying aircraft. I just don't see that happening. I mean, now with more shutdowns going on here, I really don't think. I don't see it happening. So. You could take that one as a potential buy point, sure. I would just make sure you have your stop loss in place. You never know. I've been wrong many, many times, and I could be wrong again. They could rally back to 400. I don't see it happening. I definitely do not see it happening. Gone are those days. I mean, look how much was erased when this thing fell all the way. Now, buying at 100, that'd probably be a good long-term play. Joseph says 133. Yeah, that level pops right off the screen at you. Oops, I actually go a little bit higher for your 133. But, there's a bunch of different places here where you'd be happy owning it. I guess my question for anybody who's looking at buying Boeing is, A, why are you buying it? And B, what's your time frame? Right? I'm not confident right now that they're going to be out of the woods for another couple of years. Right? Because think about what's going to happen. If we repealed a lot of the stuff that was the quarantine initiative, the shelter in place and all that stuff was pulled back, right? And all of a sudden, especially here in California, we can now go about doing things. Immediately, we started to see spikes in the number of reported cases. Obviously, people not wearing masks and not really being careful enough out there. I still think you're going to see the airline industry suffer even long down the road. A lot of people are paranoid about being in public spaces. I have a couple friends, they have not left their house since this whole thing started because they have immune deficiency issues and they are absolutely panicked about it. So as I cough on the program, that's the beginning. I got it. I'm going to go get tested. I'm kidding. I think that if you look down the pipeline of what's going to get back to normal first, restaurants and those sorts of things, I think will be your first to get back to normal as people start to put their toe in the water and say, hey, I'm going to go out and start eating again. Maybe go to the movie theater. Flying on an airplane, I think, is going to have a lot of people freaking out. There was some guy the other day, they had to turn around and he was freaking out saying he was going to kill everybody in the airplane. He lost it. This could be the new normal because of all this solitary confinement that we have all been in with regards to COVID. So I'm not a big fan of Boeing. Anybody else? Do you guys beg to differ? Do you think, how many here think you should be buying Boeing? I'd love to hear counter arguments. I mean, it's hard when you look at Boeing and you say, man, this thing was up well over $400. And now we're half price. I mean, what was the high on this bad boy? It hit a high of 446 in 2019. And here we are at 178. And this is a huge, stable company. I mean, Boeing is the bellwether in the industry. Airbus, but, they're not on the U.S. exchanges. So, to me, if you felt like you wanted to get some foothold in that market, Not a bad price. It's just how long is it going to take for it to recover? I don't know if you want to tie your capital up that much longer. If anything, maybe what you do is you start looking at it with some options plays. And Dave says it doesn't make sense to you. Big Ev says, heck no. Yeah, I agree. I think when we look at investments, this may be a great investment for 5 or 10 years. But over the next year or two, I don't think you're going to see any huge rally up. If that's the case, and you have that opinion, as I do, then why would I want to put my money in something that's going to traverse sideways and just kind of grind sideways and not make any profits? You want something that's got better trends, some better prospects, some better opportunities. We can all look at this and say, hey, there's value here. Sure. Yeah, and what about Love? Southwest Airlines, one of the greatest airlines out there. $34. Are they going to get back on their feet anytime soon? Sure. How about CCL, Carnival Cruise? I don't think so. I don't think you'll see this one back up at 75 or $70 ever. maybe not in my lifetime. Big Eb says I would buy under 100. You know what? I will tell you what. If it got under 100, I probably would buy some as well. I would probably see if I can find leaps on it and buy some leaps for a year and just go, yeah, I at 100. Why not? Historically, that seems like a great price. But there's a lot of other companies that are in the same predicament. Delta Airlines. You're at $26. It was at $60 just in January. I believe that's an all-time high for Delta. Yeah. So, it's hard not to look at these and say, gosh, it's 50% discount right now. Yeah. But that business has been severely impacted and fundamentally changed, and who knows when it'll be back up to normal. Armando says, still having problems with the 737 MAX software. Yeah, and that's another one. Anybody here want to volunteer to fly on a 737 F MAX? Only been a couple of crashes, but I'm not putting my life on the line for that one. You guys are crazy. What would be an option on BA? Sell puts. Yes, Baldhead B says, what could you do there on Boeing? Sure. If you wanted to buy Boeing, you could go out and sell puts right now. I don't have the time, right? Maybe we can do that on another show. But you could go out and you could sell the 100 puts on Boeing. I'm sure there's a market for it. You wouldn't get paid very much. And if it dropped down to 100, okay, you would now own Boeing and have collected premium. But you could also do the same thing. This was what Nick was asking about. Could we right now go out and start selling the 154 put options on Boeing? Sure. Let's do this real quick. I was going to tell myself I didn't want to go over an hour show, but thanks a lot, guys, for making me another hour show today, Dab Nabbit. That's right, Dab Nabbit. 1 second while my option chain loads up here, and I'll bring up the Boeing option chain. Where did it go? Got too many windows open over here. Oh, come on. Bear with me. Hold on. BA for Boeing. It's loading that bad boy up, and I will have it up here for you in just a sec. All right, here's the option chain for Boeing. And let's say you wanted to sell the 154. All right, there's probably not a lot of money in that bad boy. And you don't want to do it by Friday, obviously tomorrow, but let's say you wanted to do it 1 month out. So we'll do the August expiration on the monthly. Okay, it's 35 days. If you go 154, 155 is the price right now, you'd be collecting $670 per options contract. Hey, you know what, Nick? If you wanted to buy this one, you could get it for $600. You could get $670 per contract, which would be 100 shares, and you have 35 days. If it doesn't drop to 154, you keep that money. You keep that $670. It's yours. Enjoy. It's definitely a potential play. Now, if you were really freaked out and wanted to do the 100s, we saw some people were asking about the 100s. Well, right here, you get. So if you bought, you'd only get $30. They would pay you $30 to commit yourself to buy it if it dropped to 100. But, are they going to get to 100? I don't think so. I just don't see it having any real volatile, heavy moves. But we could be selling puts. Going back to the question here from Baldhead Bees, you could be selling puts at a price, one of these strike prices, that you would be willing to buy it at. Right? And let's say you really didn't want it, so you said, okay, I will go with the 130s. Right? 130 is going to get you $1.60 right now. That's $160. So let me put this number to exact 130. That way you can look at it on the screen. It wasn't close to 130. So there you go. This horizontal black line on your screen, if it got down there, and you had sold those puts, you would be obligated to buy it at $130. But if it doesn't get down there, you keep that premium. So that's one option, and I think it's a great option to be using with options. Isn't that convenient? Look at all the options. I managed to throw the word option in that segment like 18 times. Okay, let's see. If the polls are right, everything in real life goes back to normal in November, but the markets will tank. Yeah, who knows? Who knows, Tom? I honestly, at this point, I don't know what to expect. I definitely have my opinions about the election, but I'm not expressing those on this program because, you say one thing about one candidate and immediately those of you who were my friends are going to be like, oh, well, you said this about... no politics. This show is zero about politics. So, but yes, it will be interesting to see what happens in November. It's going to be crazy. Either way, whether we keep the current administration or we switch to a different administration, I think it's just going to be nuts. We're dealing with unprecedented times. It's pretty crazy. All right, I want to get out of here before I do a 1 hour show. Unfortunately, I'm already behind on that one. It's going to be an hour show, apparently. Let's go and show you the announcements for tomorrow. Here's what we got cooking economic calendar-wise. For tomorrow, it's, of course, going to be lighter simply because it is a Friday, and usually Fridays are fairly light. You can see you've got building permits for the U.S., housing starts, and then the University of Michigan consumer sentiment data, as well as inflation expectations. The Euro, they have CPI numbers, and that's pretty much it. Canada, of course, with wholesale sales. Where'd Brendan go? Miss you out there, Brendan. What's going on? I know you're selling your home and all, but no, don't abandon us. And for the earnings side, it's quiet. Tomorrow is not a really big day. You do have BlackRock, Regions Financial, Citizens Financial, and Ally Financial. So 4 financial players, but I'd call those B level, not A top tier stuff. And then for Ericsson, they're reporting earnings tomorrow. So that's your earnings calendar and economic calendar for Monday's session. Dave, I'll see you in August, my friend. I'm hoping if I'm still holding a put position, it'll be a great thing because I have to exit those if they don't start working in my favor. But have fun out at the cottage. Be safe. Hopefully you don't stay away from that whole COVID thing, right? So, sip some Modelo's by the river. All right, guys, that will do it for me. I didn't see any last-minute questions come in. Let me see if I got any that will... I don't see any that came through. Oh, Alexander. Of course, Alexander, right at the last second as I'm trying to wrap up, you dragged me into a 1 hour show. Today, an analyst talked about S&P possibly going downturn slowly to elections. So what are your thoughts? If you haven't been watching this show, Alexander, my thoughts have been that these markets are going to be going down for a while, and they haven't. It's just been unbelievable, irrational exuberance. Anybody know when Alan Greenspan said the irrational exuberance speech? You guys remember what year that was? Remember, he said irrational exuberance, and he was talking about how these markets are just ripping to the upside. They really didn't make much sense, and he thought that they were headed for a market downturn. When was it written, guys? I'm going to see if everybody remembers when that was. I'm trying to get the exact date. I knew when it came out, but I'm waiting to see if you guys report and see what you guys know when that happened. Because remember, markets sold off in 2000. That was the big market crash. But Greenspan didn't say irrational exuberance in 2000. He didn't say irrational exuberance in 99 or 98. He didn't even say irrational exuberance in 97. He said it in 1996. 1996, 4 years before the market peaks is when he said irrational exuberance. So just because something doesn't make sense now doesn't mean it has to change. It can continue to not make sense for a long time. And right now, the markets, in my opinion, don't make a lot of sense, especially with all that's going on right now. So my belief, Alexander, is that it's going to be headed down, but it hasn't been. And so my opinion has been wrong. It's been costly for me. It's okay. We'll hopefully by the end of the year, we'll have a nice positive number, but it's just been a bizarre situation. Now, I believe Big Ed, was 1996. Let me just, so I make sure, irrational exuberance speech. And it was December 5th, 1996. Yeah. And it was actually an interesting comment. I'll read it to you here, see if I can, I'm hoping it brings up here. It's, for those of you who weren't around. Here it says, but how do we know when irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions as they have in Japan over the past decade? And how do we factor that assessment into monetary policy? That's kind of the conundrum that we're in, right? We have had a market, not just housing, not just equities, not just all markets have seemed to be overly inflated. But as Mark Cuban said, You can throw all old economics out the window. We've never tried this model before. It's a new model where we can just continue to print money. And historical models used to show us that if we continue to print money, we get hyperinflation. But it hasn't happened. So if this new model shows that we can continually print money and prop up our own markets and inflate all of our asset values and there's no repercussions, then why stop? And I think that's the situation that the Fed is in right now. They're not seeing any real bad impacts from this just pumping more currency out there and creating it out of thin air. I don't know. You know, my brain, my education, my experience tells me it's going to come crashing back down. It's going to be seriously ugly. It's just not happening right now. So have to wait and see what all pans out. But ultimately, I have a feeling it will be ugly at some point. Okay, cool. All right, everybody, that's going to do it for today. Tomorrow, I'm going to have Brandon Wendell on the program. We'll talk futures tomorrow. Of course, Brandon, we never know which way that show is going to go. Talk about his think tank and some of the trades he's been calling out. He's had some pretty good ones recently. So Brandon Wendell will be our guest tomorrow. If you have something specific you want Brandon and I to talk about on tomorrow's show, send it on in at tradermerlin.com. I'll throw some fire on your screen for you just so you can see that one. Bam! Catch the heat. tradermerlin.com. Doing new ads over here, apparently. Or you can just put it down in the comment section down below the video. That's the easiest way to get your comments and questions answered. And for those of you who are complaining that people are using spam on my chat boxes, don't worry. I'm deleting that spam as soon as I see it. That'll do it for today, everybody. Take care. I will see you for Friday's show with Brandon Wendell. Take care.